Surprise, everyone. Special guest host Mackenzie is on vacation today. And we have JC in the house. JC, thanks for joining us.
What's up, Noah? How are you?
I'm good, man. And I know you were on like maybe a month or two ago with Mackenzie. Thanks for making time for us then, too. I appreciate it.
Sure.
I feel like we have a zillion things to catch up on. First of all, for some reason, I thought you were based in Florida. I just found out with the few seconds we had pre-live, you're in Pennsylvania. Were you always there, or how'd you get there?
I have been in Pennsylvania for officially, I guess since the end of 2019, right before COVID. I moved to Pennsylvania. I was living in Sonoma Valley, California prior to that.
Okay. All right.
Yeah.
All right.
So, I lived in New York City for 15 years. So I was there for a long time. So going from the big city to
the accent gives you away.
Yeah, to the wine country. Moving back, having kids, getting married. I'm not moving back into the city. So, we, about a little over an hour from Manhattan, hour from Philly. So I'm close enough, yet far enough.
All right. Nice. And kids, how many kids? How old?
I've got a 5-year-old daughter, 5.5. And my boys have twin boys that are 3.
Holy cow. You have a full house. That is awesome. Congrats, man.
Yeah, a lot of Easter egg hunts this weekend.
I bet that's right. How was your Easter weekend?
Dude, I went to so many Easter egg hunts. You have no idea. And one of them, I went to like 5 or 6 of them. One got canceled. So like,
oh wow.
Listen, if there's an Easter egg hunt out there, my wife's gonna find it.
That is awesome. Very cool. My kids are off to college, so no Easter egg hunts for us anymore. But we're hanging out here in San Juan, and they really celebrate the weekend. So those outdoor concerts. I think it was a pastor who was doing some sermon, but it was in Spanish before the concert. And everything seemingly shuts it down. There are very few stores open here. So this weekend's a big weekend down here.
Good. I mean, just think about it. You're in Puerto Rico. I mean, on, the resurrection, celebrating the resurrection in Puerto Rico, about a huge percentage of that population is named Jesus. You know what I'm saying? Right. So it's a big deal.
I know. It's awesome. It's very cool. And so I didn't know, here's the other thing, because I know you from All-Star Charts. That's not you anymore. Did you sell that? How did you go from All-Star Charts to now a new service that I'm going to ask you about just in a second? But how did you make that change?
We got acquired, AllStarCharts.com, All-Star Charts Holdings got acquired by Tiffin. It's a fintech company, like an AI company before AI was cool, like AI before ChatGPT. And All-Star Charts got acquired. It's a big company, like almost $1 billion valuation. JP Morgan's a big investor, Morningstar. So we got acquired by a big company, and I was working at an AI company for 2 years. Which I don't really talk about that much because nobody cares, but it was it was pretty cool. I got to talk to AI bots and teach them technical analysis and learn about things that I didn't know anything about. Working at a big company, I wasn't at a big company. I was at a startup that I founded. I've been running for years at All-Star Charts. So it's just really a great experience. And then All-Star Charts still is. Steve Straza is the chief market strategist there. Steve Straza was a client of All-Star Charts, right?
Nice.
Working for Stephen Cohen at the time, and an All-Star Charts subscriber. Now he is the chief strategist there. He was the director of research before, so he just runs things over there, and that is a great service for financial advisors and traders, and all kinds of research and trade ideas, all different kinds of ways and time horizons. And Trend Labs is really just me. Right. Okay. All-Star Charts was built for others. Right. That was essentially the premise of the research company. Trend Labs is just me. This is what I do. This is everything I've learned over the last 23 years. And this is what I'm doing in my portfolio. And you can follow along or not. And that's cool. And so you get my daily note either way, because, I'm not going to sail off into the sunset. I got 3 kids. I ain't going anywhere. I got a 5-year-old and twin 3-year-olds. I am right here. I might go to Disney. I might take them to the beach, but generally speaking, I'm busy. You'll find me right at my desk during the day.
That's awesome.
And then the kids come home from school, and I'll throw some steaks on the grill and then go to T-ball practice. Right? Yeah, that's my life, and
very cool.
That's going to be my life for the foreseeable future.
That means the non-compete ran out, probably, right? typically when you get bought out by a company, you got to like sit aside for a little while.
Yeah, something like that. No, something like
All
that.
right. And given what you went through, because you started All Star Charts, right?
Yeah.
So you start it, you grow it, you eventually have a client who's working there, running it as a strategist. You get bought out, and I'm very familiar with who Tiffin is, because they did get a lot of outside investments. They were getting very aggressive in the product distribution space. I think helping advisors as well. They buy you out, and then you're starting a new business. What are two things you would tell a young budding entrepreneur to really focus in on if they want to create a similar opportunity as you've created for yourself? And what are two things you tell them to not do that are common mistakes that people might make if they were thinking about going down the entrepreneurial path?
Man, we could be here all night.
I know. That's why I went with two, but I knew it would take you a while as the wheels were turning. Like, what would I tell people?
Yeah, I think the genesis of the whole thing needs to be authentic. So somewhere along the line, being an entrepreneur became like a thing. Like, oh, I'm an entrepreneur, so that makes me a better person than that guy or whatever. Somehow it became like this like status symbol.
Right.
Something like, so easy. Oh yeah, I started this company and everything's great. And no, it doesn't work that way.
No.
The company needs to start because it has to exist in order for something to occur, in order for a service to exist or to have a solution to a problem. Like, you can't be like, oh, I want to start a company. What should I do? Like, it doesn't work that way. It's like, this is what needs to happen. And how is it going to happen? Oh, we have to start a company that does that. Okay, let's do that. Right. And then you have to believe in it enough that other people are going to agree with you that is a good idea for you to, because there's opportunity costs. Like, you could be doing something else with your time. Right. So like, I think if you're going to start a company, you really better be sure that this is solving a serious problem. And this is something that you like to do, because if you don't like it, oh my God, you're going to hate your life, because I mean, you need to live and breathe it. Like, this has to be, it's a lifestyle. It's not a, like a hobby. Like, oh, don't worry about it. It'll be fine.
Well, I remember for myself, even before branching out, I forget the name of the book, but basically the gist of the book is about a baker who's really good at making cakes, and fantastic cakes. Worked for a business making cakes for them. Decided they want to branch out on their own because they make awesome cakes. They start their own business, get things going, and before too long they are out of business. And in part, the reason why was they were just good at baking cakes. They actually weren't so good at being the entrepreneurial part, the accountant, the lawyer, the customer relations, customer service, all these things that you have to deal with. And it was just sort of that eye-opening thing of just having passion alone, right, isn't enough to do it. You better hone your skills in a bunch of different areas. What's a mistake that you think you made, that you would caution people who were thinking about going down the entrepreneurial path? Hard question, huh?
That I made.
And it's interesting too, because I think about my own mistakes, and then I think, gosh, would I change what I did there? I don't know.
Right. Like,
sometimes you make decisions.
Yeah.
Right.
I would say probably, and this is something that I struggled with early on, and I see people struggling with a lot, is finding help. Getting a good team around you, like people you trust that are better and more equipped to do things than you. Like, wearing every hat. Like, I understand at a certain point, like, you gotta be the guy that cleans and takes out the trash, and you gotta be the guy doing the M&A, and you gotta do everything. And I get that, but you really want to identify what you hate doing the most and what you're the worst at. Those are probably two things, and usually they're the same, right? But if not, like, what you're worst at and what you hate doing, and find somebody to do that for you. And that's going to free up so much headspace and frustration, and it's going to allow you to do more of the things that you're good at. So for me, I hate accounting. I hate talking to lawyers. I hate, not that they're bad people. I'd rather be doing fucking anything. Like, than talking to accountants and lawyers. I love them. Beautiful people. Not the point. I'd rather be getting, a root canal. right? Like
Yep.
it's not for me. I'd rather not do it. I'm not good. I don't want to be good at it. Fine. You know what I'm good at? I'm good at looking at charts. I'm good at talking to smart friends of mine about said charts.
Yep.
Building strategies and algorithms, and like that's what I'm good at. So if I'm doing anything that's not those things, I'm failing everybody around me, from
Right.
customers to employees to partners to my family and everybody under the sun if JC is not doing JC things, right? So
Yep.
I need to figure out a way to be able to have more time to do more JC things, right? And I think that a lot of people have a hard time and are doing less of what they're best at and what they love doing because they're so busy doing all that other stuff, So like, don't be afraid to trust somebody, and you're going to get screwed. And I got screwed multiple times, by the way, people trying to screw me over. No one's ever heard from those people again. The point is, I'm not the guy that you want to mess with, but not the point. The point is people are going to mess with you, just like.
Oh yeah. You've always got things coming at you at different times. It's true. Well, so give everyone that's watching the pitch on Trend Labs. What is it? What do you do there? Why would people like it and want to go there? And I think ultimately subscribe, right? You have 2 subscription offerings, I think.
Yep. So every day I send out an email called Everybody's Wrong, because one thing that I've learned over 23 years at doing this business and being very observant and talking with practically everybody, is that the trend is right. Like the consensus is right for a period of time. And then when consensus reaches extremes and everybody believes something, then it's we want to take the other side, right?
Yep.
Everybody's super pessimistic on something. We probably want to look to be buyers. Everybody's super optimistic on something. We probably look to be sellers. And there's always somewhere in the market, usually multiple places, where everybody's wrong. And so that's the type of thing that we're talking about every single day. And we have fun with that. And that's free. And you can sign up for that at trendlabs.com. And then
cool.
We've got so then we take that to another extreme and we quantify what it actually means for consensus to be at an extreme. We quantify it 3 different ways. The first way is very simply taking the FINRA data that comes out every 2 weeks that has all of the short interest for every stock. And so these hedge funds don't have to disclose their short positions in many cases, but the brokers that they use do. So we get that data from the brokers, and we get that every 2 weeks. And so we can see the short ratio. So if you take the total number of shares that are short and you take the average daily volume, you can calculate how many average days is it going to take for all the shorts to cover. The more days, the more vulnerable that stock is for a squeeze. We don't just buy it because everybody hates it. We wait for the turn, right? We have that a key threshold that we lay out that if prices break out above that, now we're in. So that's the angle of attack number 1. Angle of attack number 2 takes that same data with the short interest, but looks at the ETFs. So now we have thematic squeezes like, for example, biotechnology, some of the biggest short positions of all time. How have biotechs done lately? Small caps last summer, some of the biggest short positions ever. A large cap NASDAQ 100, the biggest net long positions ever in the NASDAQ 100 futures last summer. How'd that turn out, right? So, you looking for the energy coming into this year, crude oil futures, some of the largest net short positions ever. How'd energy do this quarter, right? So, we're looking for those extremes, and the divergence very specifically buys stocks and options to further accelerate those gains to take advantage of those unwinds in those extremes. And then the third comes from the Commitment of Traders report. That's the COT report. So 3 angles of attack in the divergence, and those are commodity futures, bonds, anything that's not stocks. And then we play that using ETFs or stocks that are related to those futures, like energy or gold and silver for that matter, wheat these days. And so there are equity ways, because we trade equities. We don't trade futures. It's stocks and options. And so that's the divergence. And then the primary trend is our other product that's very simply, do you want to own the best stocks? The only way to make sure you do that is to buy the best stocks. It's the only way to make sure that you own the best stocks, buy the best ones. And so we quantify, there's a lot about the market that we don't know, right? Especially about the future. Right. But there are a few things that we do know. Asset prices trend, we know, right? Facts only. We know that momentum begets more momentum, right? We know momentum is also a thing. We know, we have the math, everybody knows. And we know that in order to be the best stocks, you have to outperform your peers. That's what by definition makes you the best. You're better than the others. Well, that's called relative strength, right? So those 3 things are the key pillars to what we do at the primary trend, where we're essentially just buying the best stocks in the S&P 500. And those are my strategies, right? It's what I think is the best way to approach the market. And, we're working on a small cap strategy right now that we've been incorporating for years. And, we'll be releasing that to the public soon. But, that's why it's called Trend Labs, because we're constantly working on things. Why? Because I have money that I need to put to work, right? Remember, I sold my company, right? So I made a couple bucks, right? So I got money to put to work, and I want to do it in the best ways possible. So these strategies are very selfish to me and what I'm trying to accomplish. And as it turns out, there's a lot of people out there who are trying to accomplish the same things.
Right. Absolutely. And are you finding, you said you're working on a small cap strategy. Are you finding there's differences in applying what you do relative to large cap that has tons of volume, tons of price action relative to small caps where you don't have the analyst coverage, you don't maybe have the same liquidity profile? Is it different in terms of how you approach things?
Yeah, they're different and they're the same, right? So they're the same in the fact that, it's the humans that are driving that supply and demand, or robots built by humans that are driving that supply and demand. So those same principles of prices, trending, relative strength, momentum, all of those are all baked in to small caps as well. So that's just human behavior. Nothing there changes. What does change are a few things. In all these large cap stocks, there's options in most of them, right? I mean, 90% of the S&P 100 has weekly options. So there's plenty of options, liquidity in a lot of these names. When you go down the cap scale, it's a different ballgame. Number one. Number two, we came up with our own definition of what a small cap is, because I live in the United States of America and I do what I want, right? So to suggest that a small cap is between 300 million and 2 billion, and a mid cap is between 2 billion and 10 billion, and a large cap is north of 10 billion is ludicrous when you have $5 trillion companies. $10 billion, that's nothing, right? People are like, oh, JC, $10 billion is a lot. No, it is not a lot. It is nothing, right? So we have our own rules, because those rules are dumb, right? I think that for you to be a small cap, you got to be at least a billy, right, Noah? Right?
Yeah.
Got to be $1 billion.
I'm with you.
And so 1 to 10, I think that's a good number. 1 to 10 makes you a small cap, right? And then 10 to 30, 35 probably makes you a mid cap. Large cap on top of that, mega above 200. I think that's probably a good way to do it.
Yeah, I forgot what index provider I was looking at, because I was looking at capitalizations. This was several months ago, right? Because we have stuff in the cannabis space, and by some definitions, they would fit in the small cap. And I'm like, these are micro caps. These are OTC, Canadian listed stuff. But what I noticed was some of the indexes now are, instead of doing hard dollar amounts, just saying this percentage of the market, this percentage, and then this percentage. And that seemed to make a bit more sense to me in terms of moving that definition around. Because as you point out, they're very different company sizes today.
Like the Russell 1000 and Russell 2000.
Yep.
You have the Russell 3000, and the biggest 1000 are the Russell 1000.
Right. Doesn't matter what size they are, right? Or in terms of market
Russell
cap,
2000 small caps. Right.
Yep, that makes sense. So I saw there's 2 subscriptions, like one's $500 a year, one is $5,000 a year. Is that more targeted to financial advisors or people who want more hand-holding?
Listen, we do a lot of educational material because I really can't help myself. I got things to say. I have opinions, Noah. I don't know if I don't know if you heard. So, I have heard. And listen, and it's really helpful for me to do the educational stuff. So Ralph Acampora, a mentor of mine, legend in the space. Everybody knows Ralph. Ralph, used to always tell me, JC, you need to teach. And I'm like, Ralph, I don't have time to teach. Like, I'm trying to make money. I'm trying to grow my business, trying to learn about the market. I need to be taught. I'm not trying to be the one teaching. Right. He's like, you got to teach because it always brings you back to the basics. It always brings you back. And he used to teach at the New York Institute of Finance. Like, I've met so many traders and investment bankers and RIAs who took his course back in the 90s and stuff like that that tell me, oh, I went to Ralph's class. And, I would love to teach at a university. I'm like 5 minutes from Lehigh. I would love one day to be an adjunct professor there or something like that. Like, that would be so fun.
You got to reach out.
I got 3 kids, and I'm not going to be teaching at Lehigh, but maybe one day I would love to. In the meantime, at Trend Labs, we have a beautiful community, and, we get together once a week and we talk about whatever, psychology, sentiment, trend following, momentum, relative strength, seasonality, bonds, Forex, we dive into different asset classes, crypto, intermarket analysis. I mean, you name the subject. And then, I'm good at happy hour. So I have a lot of friends that are really, really smart and really good at, the market that I lived in New York City for a million years. So like I met a lot of people and they're still very good friends of mine. So they'll just come on for an hour and just talk about whatever, whatever they're good at, anchored VWAP or, intermarket or whatever it is that they're good at. So that's what we do at Trend Lab. So there's a lot of hand holding, whether you like it or not. You don't have to come, but we like to have a good time and learn something every week. We do that every Friday. And then, so the divergence is, it's the yin to the yang, the divergence and primary trend. So the divergence, we're looking at weeks and months, right? Okay. With the shorter term time horizon, looking at weeks and months, we're trading options there when available and when that opportunity arises, which is the majority of the time, believe it or not, because we're working with big companies, right? Generally speaking. And so sometimes, not always, sometimes we'll buy ADRs or smaller cap stocks that just don't trade options. So you get the stock and the options at the divergence. And we're looking for that mean reversion and extreme in positioning. And the primary trend is very different. The primary trend buys the best stocks. We're looking out, quarters and years, right? We're looking out, 3 months plus, a year out, looking for primary trends, really just buying the best stocks, taking advantage of the bull market, and so they're two different things and they're very complementary to one another. And for me, selfishly, what's great about these two strategies and then the small cap strategy that's coming soon, the reason that I love that for my personal portfolio is because I am 44 years old. I have 3 kids. So I got these kids' college funds is ridiculous, right? They got more money than most people I know in their college funds. Okay. But it's long only. It's college funds. Right. My wife and I, long only retirement accounts. Like, right. I own two properties, my house, and we have another house on the lake.
Yep.
I'm in. Right. So I'm looking for, like, if the market goes up and the economy's great and everybody's making money, I'll do just fine. So I have to go out of my way to use the rest of my money to be able to add additional strategies that are uncorrelated to those things. Right. And that's true diversification. I'm a firm believer in the Holy Grail, where every additional strategy on top of your portfolio is lowering. I mean, I'm a firm believer because I see the math. It's just math. Sure. Lower your overall portfolio volatility, which increases and accelerates the rate of compounding of your overall portfolio. So people think diversification is sacrificing forward returns. It's actually the opposite of that. You are accelerating your gains and by lowering your overall portfolio volatility. It's the opposite of sacrificing forward returns. So that holy grail of adding additional strategies, especially for somebody like myself, and there's a lot of other people in my exact same situation. They got the retirement account. Maybe they worked at a company forever and they got that stock too. And then they got the kids' college fund. And then they have, they're in. And so with the rest of the money, you have to figure out ways to add additional uncorrelated strategies to that. And so that's my primary focus. And that's what Trend Labs is.
And so it sounds like it's a bit more of a tactical approach, right? Are people using it more for tax-deferred accounts, retirement accounts, and things like that? Or is there some tax component built into what you're doing?
No, you could. You absolutely could. Both strategies can be in tax-deferred accounts, no question. I mean, the options, depends on how you have things structured. I'm not a tax expert, but yeah, for sure. I mean, these are stocks. We're not just keep it simple, stupid, Noah.
I like it.
Life's complicated enough.
And so it's all tactical, right? So we've got a, war or a military excursion going on in the Middle East. We had COVID, Russia, Ukraine. Your strategy does, in the whole scheme of things, doesn't care about those things, and to the extent that it's, affecting stock prices, I guess.
Yeah, I mean, listen, we're data driven, right? So, in my experience,
but you don't care about what the unemployment numbers are or where interest rates are going, do you? You're not really looking at
the only employment I'm interested in is my own. Okay. I can't control whether other people want a job or whether they're good at their jobs or needed. Like I got to worry about myself. Right. So the only unemployment I'm worried about is my own. So fortunately I have plenty of employment opportunities. Thank God. Incredibly blessed. Right. Speaking of, make sure you have a good network of friends that you can call if you need help, and use your friends. There's nothing wrong with that. They're your friends. Like they're there to help you. So and then be helpful when others come to you for help also is another good piece of advice.
Yeah, that's the entrepreneurial advice I would give people, which is don't be afraid to ask for help from people. Whether it's advice or something, people are always more than happy to give it to you. So you just have to ask typically. All right, well, that's good. Well, so how's all this going, right? How are the strategies operating in this crazy environment we seem to have lately, right? Mag 7 seems to suck. Energy is doing awesome. Is what you're doing being able to navigate through some of these things?
Yeah, no, I mean, you make a good point there. Like, so, you're talking about the war and all these things, like, the extreme in positioning by asset managers in crude oil was at historic lows coming into the year. So we were, and then energy is breaking out to new all-time highs out of a 17-year base, so like,
Right.
yeah, of course we're buying energy stocks. Like, that is exactly what the strategy is designed to do, is to find opportunities like that. And then it turns out we're going to war. Who knew? I don't know anything about war. I don't know anything about science. We've owned a ton of biotech stocks. We just had 2 biotech stocks. One doubled 48 hours after we bought it 2 weeks ago. One got bought out last week, Centessa, right? Kodiak was 2 weeks before that.
Nice.
I don't know anything about science. I know nothing. I got nothing. So,
Just the numbers are telling you. Yeah.
it's just we're buying guess what? I'm buying more biotechs, right? The biotechs are working. I want more. Even in technology, look at the strength that you're seeing in hardware and semiconductors, and you haven't been seeing that in software. So we talk about dispersion in the market. You have 4,000 basis points of alpha in energy relative to technology in Q1. 4,000 basis points of alpha. But what's going unnoticed, I think, is the dispersion within tech itself. Right? You have these mega cap tech stocks really, really struggling to make any progress at all since last October. Right? Meanwhile, small cap technology is up 4 weeks in a row.
Yep.
Mid cap technology looks great. Hardware looks great. Semiconductors, Taiwan as a country looks pretty good. Right? So like the dispersion even within tech stocks is very, very extreme. So I think that's probably getting is the aspect of Q1 that nobody's talking about.
And so with what you're seeing and then how you help people implement it, do you need to do that when it gets narrowed down a bit more? Do you need to do that then with just a group of individual stocks, or are you finding what you need in sort of the growing area of thematic ETFs? Are they narrow enough for you to pick through that category?
Yeah, you usually see like crossover. Like you'll see like super high short interest in individual stocks, like biotechs or whatever, and then you'll see the ETFs themselves also heavy short interest, like small caps in general. The short interest just exploded recently, so you could really see that. And then you see what's inside of the Russell 2000. Then you look and you see those stocks are being shorted too, right? So it makes sense. And then you'll see it from like on the futures market, you'll see the same thing. You'll see. Not always, but oftentimes actually, you'll see, huge short interest in the Russell 2000 small cap ETF. You'll see huge short interest in small caps themselves, regional banks, energy stocks, biotech stocks, and then you'll see the futures market and the shorting Russell 2000 futures also. So like oftentimes you'll see the same thing using different data sources, and then you see the tide turning, and that's when to pounce.
Interesting. Hey, I want to pop up a question. Skip, who's one of our regular watchers. Thanks for tuning in, Skip. He's asking, do you put more weight on the FINRA data than the CFTC data? And he said, thank you for hanging out with us today.
It's not so much more waste. They're just different. CFTC is a government entity. So when the government shut down, we didn't have that data. FINRA is an SRO, self-regulatory agency or organization. And so they continue to publish every 2 weeks. CFTC is every Friday. The FINRA data is just equities and ETFs, right? Like in traditional brokerage accounts, and the CFTC is futures, so they're just different assets. Like you're not going to get much information about, wheat or soybeans from the equities market. You're just not.
Right.
You're not going to see much information on, heating oil and unleaded gasoline futures, which just had some of their best quarters ever. You're not going to see that in the equities market, right? And then if you're, people are like, well, I don't trade commodities, I don't trade futures. Well, neither do I. I don't trade those things either. But certainly looking at the futures positioning in the crude oil and the unleaded and all that stuff, and then seeing the breakouts in energy was a great combination and a reason to buy those stocks. right? So like,
Right.
same thing with precious metals, like the short interest in silver was off the charts last
Mhm.
year before that ripper. These guys were
Right.
crazy, and we were already buying these things. It was great. The price of silver kept going up. They kept shorting more. It was
Right.
fantastic, right? So I wasn't trading silver futures. I was in the gold and silver stocks, and there were zillion of these that doubled last year.
Wow, nice. And when you see something like that happening, you're not sitting around then guessing, right, when it's time to get out of that trade. You're just simply waiting for, the momentum or the trends to change on that position, I
No,
guess,
we
right?
set price targets. We set price
Okay.
targets, and when they hit our targets, we get out.
All right, interesting. And with the service that you have, does it give people both sort of the entry and the exit point, I would presume, right? So they'll get an alert and saying, hey, we bought this, but then later they'll get that same alert that says, all right, it's time to get out, or you set a price point of where to get out and they can set their limit orders and things like that.
Yep, 100%. So, with the trade, we'll put it on sometimes in real time, doing a live stream, we're looking at chart, be like, okay, now's the time. And we'll put on a trade in live stream. But whether it's live or we do it while we're not live, which happens all the time, of course, we'll send a direct email. This is where we're buying it. This is where we think it's going. And this is where it would have to break below to stop us out. And all bets are off in that case, right? So we lay down the plan. And then in an options trade, we're going to take half off the table on a double. So as soon as that premium we paid on the option doubles, we take half off the table and then we ride the rest, right? So there's the best way to screw everything up is to give yourself an opportunity to screw everything up, right? So the idea is to take our lizard brains out of the equation altogether, right? Because we can't think straight when our stress levels are elevated, and our stress levels are most certainly elevated when there's money on the line. We can't think straight. That just, and don't feel bad about it. That just makes you a human. Right? There's perfectly humane for you to have these feelings and for you to act irrationally during times of stress. But it's important to recognize that, be self-aware, and to eliminate ourselves from the equation altogether and set the plan and then just follow the plan. It's really not that hard. And so, if you're going to buy 10 contracts at $20, you're going to sell 5 contracts at $40, right? And it'll immediately put in that good till canceled order so that when it gets triggered, you're out. And you put your stop, and when it gets triggered, you're out. You just build a plan that you can stick to that's based on your own parameters and your own risk tolerance. And we identify all of that, and be aware that the market is, in many cases, going to prove your thesis to be invalid, right? And that's okay. I'm Cuban from Miami. I played baseball. I get it. We're going to fail all the time, and then I got to just suck it up and go play defense for a few more innings and then come back and try again, right? Like a big boy, right? And so that's okay. And so in the market, it's the same thing.
Nice. I like it. So what's the type of person that then comes to you for a service like this? Is it someone that is working with a financial advisor, or they're typically not? What is their, I don't know if it's net worth, or maybe it's more investable net worth, right? Stuff that they're actually going to put into the market. But what does it look like for the people that come to use your service?
You know what I've come to learn, Noah? I used to think about this a lot. Who's our target audience? What I've learned over the years, meeting, people who have been following my work and my trades for many, many years. And I've been incredibly fortunate to travel all over the world, throughout Asia and Europe and all over North America, speaking with people who have been following me for years. You know what it is? These are just people that want to make money in the market, right? These are, financial advisors. They are young individual traders that are engineers or, have a different job, lawyers, doctors, right? And, didn't have my experiences working on Wall Street for all these years and know all these things that I take for granted. And, they're smart enough to realize that they need to turn to somebody who has more experience. Like I call my doctor. If if I can't walk and my ankle's turning blue and black, I should probably call the guy who knows about how to fix an ankle, because I sure as hell am not that guy, right? I'll tell you what I think about a price trend in the S&P 500. I'll tell you all day about that, but I don't know anything about science, to my earlier point. So that, you turn to that. And I think, so just in general, just anybody and everybody from all over the world. And it really, truly has been an amazing experience. Just, hanging out in our community, just we did a live video earlier today for the primary trend. And there's people in there from, the United Kingdom and Panama and New Zealand and just,
cool.
beautiful.
That's awesome.
Beautiful.
You bring up a point a second ago. I guess I didn't even think about this, but what were you doing before the entrepreneurial stuff, right? With All-Star Charts. And out of curiosity, it feels like, you'd have a bit of a math background, right? So do you come to finance from math, or you came from finance to sort of learn the math, or, what was your background before doing this?
Funny you ask. I came to finance because I hated accounting, actually. So I grew up in Miami playing baseball. I wasn't good enough to play at the University of Miami, but I was good enough to play in the Northeast at Fairfield University, Division I, and the MAC, and right outside New York City, and right in the hedge fund capital of the world. Right. So I didn't come from a stock market background. It was just kind of my parents were like, all right, let's just use this kid's curveball to get him into a better school and put him in a good situation. I mean, that was literally the logic, as it turns out, schools in the Northeast could use another Cuban pitcher on the staff. Right. So
that's awesome.
So I use, my parents, recognized that, at least my father. And so there I was at Fairfield University in Connecticut. And, my friend, and then so for whatever reason, the athletes needed to declare their majors before other students. I don't remember. I have no idea why. And I remember calling my dad and being like, Dad, I got to pick my major, man. I don't know. I'm just trying to play baseball and go to parties. Like, I'm just in college, mix in a class or two during the day and, move on. And my dad's like, well, you're in the business school. So, he was like, finance, management, marketing, like there's different options like IT, business IT, whatever. And my dad's like, just study accounting because it's not going to hurt you. Right. And, as it turns out, he was right. Like, it's not going to hurt you knowing accounting. And as a businessman, that has actually helped me. But boy, did I hate it. I couldn't stand accounting. I wasn't good at it. I couldn't concentrate. My ADD didn't let me. Like, it's just not for me. Right. I have a beautiful, amazing a group of accountants that handle all that stuff. And God bless them. I hate it. And so I couldn't do it. So I was an intern at Merrill Lynch in 2003.
Nice.
And it was love at first sight for me. Like, it was
nice.
It was a combination of my hatred for accounting and my love for the markets, all tied into one. Great experience at Merrill. Lived in New York City that summer.
Just calling away.
I'm sorry?
So just cold calling away?
No, I was stuffing envelopes. I wasn't allowed to talk to anybody. You kidding me? No way. I was getting coffee. I was stuffing envelopes, cold calling. Are you kidding me? I was low man on the totem pole.
Nice.
And ultimately,
how long were you there?
I was there for a year. I was there in 2003. I was an intern.
Okay. All right.
So it was between junior and senior year of college.
Okay. All right. Nice.
And then after that? And then just worked at various brokerage firms, doing everything from, cold calling to putting investment banking deals together and bringing them to our high net worth clients that we already had, and then running my own team, and then like I dabbled in some insurance, talk about boring, so just like I kind of like felt my way around the business, ultimately then got into technical analysis. That was kind of the common theme. In 2005, started studying for my CMT, because I realized that I needed to learn something. So I got into technical analysis pretty early on, thank God. And then in 2010, I started a blog because I started writing in 2008 during the great financial crisis, because I was already a CMT, already had like 5 years under my belt. So like I thought I knew everything. So I started writing to friends and family, emails, just kind of keeping them updated on the world falling apart. And so that was kind of the beginning of my writing. I was following a few blogs. And then after the great financial crisis, that was really the genesis of, the social media, finance, FinTwit, that you see today started there, because everybody finally realized, can't go to the banks and their research because it's all their fault, and can't trust the media because they missed the whole thing, and they were parading around all these clowns throughout the entire crisis, and they're equally to blame, and blah, blah, blah. And so whether any of that's true or not, some of it is, some of it isn't. That was sort of the perception. So it's like, okay, why don't we just go straight to the source? If you want to know about the economy, go to the economy blog. If you want to know about venture capital, you go to Fred Wilson's blog. If you want to go to this, you go to that. Everybody, and then I was just the chart guy. I started All-Star Charts as a blog, and launched a hedge fund in 2012 and was managing a hedge fund. And, being in your late 20s on Fifth Avenue, with an office on Fifth Avenue as a general partner of a fund, it gets expensive. So in order to pay the bills, a group, wanted to sell my research to help me pay those bills. And I was like, yeah, knock yourself out. I got to do the work anyway. See if you can make me a few bucks.
Right.
And as it turns out, they did. And so that ultimately turned into, a much bigger international, multinational research company for, the biggest institutions in the world. It took me to 20, 25 different countries. I mean, just an unbelievable experience. And then we got acquired, and here we are. This is happily ever after, me and Noah, talking.
Oh, it's good. Yeah, I mean, you are obviously early too, sort of doing it online, doing it on your own with your own voice and messaging, right? It seems so normal today, right? People want blogs and they've got their YouTube channels and things like that. But yeah, I know you were the early adopter of doing that, but it seems like the world has moved towards what you're doing, right? And moved away from the bigger networks.
You know something funny, Noah? I'll tell you. It's funny that you say that. It's hilarious that you're saying that now, because at the time when I launched the blog in 2010, it was like, oh my God, you're launching a blog too? Everybody's got a blog.
They thought it was saturated back then. Little did they know. So yeah, that's interesting. All right. Well, this has been awesome. Maybe before we go, give me one good idea to share with people who are watching, and give me one idea that a lot of people right now think is a good idea, but you don't like so much.
What's the time horizon? How far are we going out?
Next quarter or two, year through year end even.
I like these tech stocks, mid caps, small caps, hardware names, the areas that are already winning, I think keep winning. Think about relative strength, and then nobody's talking about it. Like, nobody likes these things at all. And so think about the market as like a beach ball. When you hold a beach ball underwater, you can feel the ball pushing up against your arms, right? And then when you let go, the ball shoots up in the air. That's what relative strength is, right? So in other words, we want to buy the victims of markets being under pressure, not so much the culprits of the ones driving the selling pressure, but the victims. And those are the beach ball effect. When the culprits sort of let up and that selling pressure lets up, those showing the relative strength, they're going to pop. I think you're going to see that in hardware, in technology, particularly down the cap scale. Small cap tech is up 4 weeks in a row. So I think that's a place that we got to look. And what do people like that I'm just not thinking right now? Just generally speaking, people like shorting the market, right? And selling stocks. You're seeing individual investors, according to AAII, more bears than bulls for 7 consecutive weeks now, I think it is, and 6 or 7. And then you're also seeing the median short interest in the S&P 5, in the Russell 3000. The median short interest is at 15-year highs. And I'm seeing net outflows out of equity ETFs for the first time since last April. And the largest volume in inverse ETFs that we've ever seen. So not only are they selling the stock, they're selling the vehicles that go up when the market goes up, and they are buying the vehicles that go up when the market goes down at the highest rate ever. And I think that is foolish, and we are doing the exact opposite.
Interesting. Yeah, we've actually seen, we have a couple actually of all short ETFs, and the money's sort of been hot. Someone's coming in and out short term fairly quickly, but it's we get a smaller version of what versus companies like ProShares or Direction sees. But it's been interesting to watch that. People are moving money in and out of that space.
I think they're all wrong. I think they're crazy.
Yeah, interesting. All right, well, this is awesome. As always, thanks for making time for the audience. Again, trendlabs.com is where they can find your services. So, and you said they can sign up for 1, just a free email, but then 2, you've got paid services that they can subscribe to.
Yeah, come on down. Come on down.
And then on X, what's your X account? JC underscore, right?
X account is JC underscore Parets X.
And is that an NFT? Is your is that like the duck NFT thing?
Oh yeah, it's not a duck, but we don't need to go there. It is. I just want everybody to know I don't take myself too seriously. We like to have some fun. We're making money in the market. Life is short. Enjoy yourself. Don't take yourself too seriously.
That is the key. Actually, just quickly though, where are you all things crypto and Bitcoin? Is Michael Saylor going to rule the world, or what's going on there?
I doubt he will rule the world. I'm rooting for the guy. You know, I got a Bitcoin miner back there heating my pool. So, I mean, I'm in. You know,
Nice.
I own some NFTs and I own some crypto projects, and I'm long Bitcoin in the portfolio at Trend Labs. I mean, I'm in. Like, let's go.
Nice.
I'm rooting for the guy.
All right. Hang out with me for a second. I'm going to hit the outro video, but for everyone that tuned in, thanks for tuning in. Your regularly scheduled host will be here tomorrow, Mackenzie Peterson. But yeah, JC, I appreciate the time. But yeah, hang out. I'll do the outro video and cut the live feed, and we can chat for a minute before you go.
Sounds great.
Thank you, man.
Yep.
Before investing, carefully consider the investment objectives, risks, charges, and expenses found in the prospectus, available at AdvisorShares.com.